Adrian Morris, thanks for coming on the show, man. Mate, you're kind of the resident expert on MicroStrategy. Let's get stuck into it. With MicroStrategy, a lot of people kind of approach it as seeing it as like a leverage play on Bitcoin. Let's go through the basics of how it works and why someone would want to own MicroStrategy, or sorry, strategy now over just owning base Bitcoin.
So let's talk through the some of the details here, right? In August 2020, Michael Saylor decided that he was going to take his company in a different direction. That direction was towards Bitcoin, right? And essentially, what he is doing is that he is using corporate funds through a variety of means to acquire Bitcoin to put onto the company's balance sheet as a way to, you can say, against inflation. You can say increase the company's overall valuation. You can say create a new way of looking at corporate structure altogether. And here's what that means at a very, very high level as well. You put Bitcoin in the balance sheet because Bitcoin is a very, very volatile asset, as we know. Those qualities become part of your equity. So a stock is the equity. The market is going to essentially say to you, now that you have this highly volatile asset on your balance sheet, your stock is now inherently going to become more volatile because you have different players that are coming into the market, right? You would have people that are interested in Bitcoin. You'd have people that are interested in strategy. You'd have people that are interested in the increased volatility. And you would have people that are interested in either benefiting from that through shorting, benefiting that through the options market, benefiting on that through a variety of arbitrage means. So long story short, it turns strategy into a leveraged Bitcoin equity is a common nomenclature that goes on right now. And the reason why it's leveraged is because they are using leverage through convertible notes to add Bitcoin to the balance sheet, and that convertible note is debt, but we can get into what that is. They're using at the market equity offerings to buy Bitcoin, and now they have other additional offerings in Strife and Strike that are allowing them to buy Bitcoin as well. And all of this acts as a bit of a flywheel effect that allows them to add more Bitcoin in the balance sheet. And as Bitcoin grows, the company's valuation grows. And of course, with the volatility, you have outsized volatility on the stock as a result.
How do the convertible notes side of things work? I feel like everyone's familiar with the terminology, like the convertible notes aspect of strategy, but how do those function?
So if you want to think of, and I want to make sure that I say this in a concise way, right? Because it can be a very heady topic for people that are not, familiar with them. But a convertible note is essentially a company agreeing to pay back debt in stock at a later date. So let's say that, and you've seen that MicroStrategy has done several convertible notes, right? So what they are essentially doing is they are borrowing money from a lender or an investor, right? And they are taking that money and saying to them, we will pay you back at a certain strike price, so that would be a stock price, and a certain number of shares at a future date for this capital that you're giving us. And companies, investors, hedge funds, whomever find this very, very interesting and very, very advantageous because it allows them to lock in profit with minimal downside risk, but also getting exposure to the upside potential in a stock price. And they're often giving that at 0%, right? So strategy is getting hundreds of millions, if not billions of dollars at 0% to buy Bitcoin. They're buying that Bitcoin. The Bitcoin is going onto the balance sheet, and then they're paying back the debt in stock at a later date. They're essentially, the way to think of it is that a government prints dollars, right? Whether it be the Australian government, the US government, they print dollars and they're inflating away the currency, right? They're debasing the currency. What strategy is essentially doing is they are printing shares to buy Bitcoin and putting the Bitcoin on the balance sheet. And because they are printing shares, but also putting Bitcoin on the balance sheet, that action is accretive versus purely dilutive. And that's one of the levels, the levers of accretive dilution that strategy would have, right? They're issuing shares to buy the debt, to buy the Bitcoin in the form of debt. They're putting the Bitcoin on the balance sheet. The Bitcoin accretes in price. The stock accretes in price. Wash, rinse, repeat. So it's essentially issuing debt to buy Bitcoin through stock.
How does the preferred stock offering fit into things?
So the preferred stock offering, and this is the one that we've gotten a lot of questions on recently. We have Strike and we have Strife, right? And it can be very easy to confuse the two. Strike gives an 8% dividend that is convertible to strategy shares. Strife gives a 10% dividend and is not convertible to strategy shares, right? So that is why you have one that is perpetual in the case of Strife and one that is preferred in the case of strategy. So, oh, sorry, wait, I gotta say that. I said that backwards. You have perpetual, preferred, and preferred. Now, with regards to Strike, a person would take on an investment in Strike for a few reasons. They want a fixed return on their investment, and they're not particularly focused on that pure upside potential in strategy. So if you say you have, and this is just throwing out figures, right? You have $1,000 you want to invest, and you want to get a fixed 8% return on that, and you can take the up and down. That's something that is more of a fixed income play in the case of Strike. You're not necessarily looking for exposure to strategy. However, you do have the option to convert into shares. In the case of Strife, and Jesse Myers actually has, and I don't know if you follow him or know of him, he has a very, very good breakdown of the Strife offering. Strife is 10%. You cannot convert it to shares. It is payable out in cash. And it is just another kind of a fixed income play for a different kind of investor that has a different risk tolerance that may not want convertibility into strategy shares. They just want the dividend. And this is me simplifying it very, 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 very much. But that is kind of it at a very, very high level. Now, with that said, and we're going to go further into this now, you have the convertible notes, right? You have Strife, you have Strike, and then you have the ATM. Now, the ATM is the at-the-market equity offering. That is selling shares to the market in order to raise capital for your company. Now, you can use it for corporate purposes, or in the case of strategy, corporate purposes and purchasing Bitcoin. That is another kind of accretive dilution, right? You are diluting the stock because you are issuing shares to buy Bitcoin. However, what is really happening is that it's accretive because as Bitcoin accretes in value, well, rather, this is the thesis. As Bitcoin increases in value, that's going to drive up interest in the stock, which is going to drive up the stock price. That is why it becomes accretive. So even though they're issuing shares in a way that's dilutive, it is accretive because they're using those shares to buy Bitcoin. And the Bitcoin is increasing the volatility of the stock, which is increasing the interest in the stock, which is increasing the price of the stock. So that is why it is accretive dilution. And also, proportionally, your Bitcoin per share is increasing as well. So that, while it may not go up in perpetuity, is another benefit of the stock because people like to see that correlation between I own X amount of shares of strategy and it correlates to X amount of percent of Bitcoin. And it's just a very, very difficult concept for people to get their minds wrapped around because you have a traditional stock that is now having a Bitcoin, which is a crypto asset on a balance sheet. It is two different ways of thinking about things, right? The ethos of Bitcoin is very much not TradFi, and now you have TradFi using Bitcoin on their balance sheet, right? So it throws people for a loop. But the best way to think of it, well, for me rather, is I think of it as what strategy is doing, what Saylor is doing, is that he's building out an economy. And here's what I mean by that. You have Bitcoin at the center of this whole thing, right? He is pushing Bitcoin at scale into traditional finance. And the reason why this is an economy, the reason why this is an ecosystem that he's building around this thing, is because let's just walk through all the different offerings that now exist, right? When it started in August 2020, it was just strategy stock, right? And then the options interest started exploding. The premiums on the options market started getting out of control at certain points, right? So you have that. Now that we are in 2025, we have Strife and we have Strike, right? So those are four levers that he has right there. On top of that, we have MSTU, which is a levered play on strategy. So it's a 2x levered play. We have MSCX, which is also a 2x levered play. So that's 6 levers that now exist. You also have MSTY, which is an additional dividend play that gives an 8% yield. Then MSTY, MSTU, and MSTX also have options markets as well. And then on top of that, you have these auxiliary plays, as I call them, where you have OwnB from Bitwise, which is now an ETF that is going to be representing a basket of companies that have over 1,000 Bitcoin on the balance sheet. So all of them are going to be on this within this ETF, and different percentages of shares are being purchased in the ETF depending on the company's size. Strategy is the largest one, which is going to have the largest proportional percentage. Then you also have something called BMAX, which is an ETF that's going to give exposure to convertible bonds of Strategy. So this isn't just Saylor buying Bitcoin and doing shit, right? This is a very, very strategic, no pun intended, approach that he's using. What he is doing is he's creating an economy of scale around Bitcoin with Strategy at the center of it. And people are having a hard time wrapping their mind around that because they still look at Strategy in a sense of net asset value and net asset value multiple and so on and so on and so forth. But I think they're missing the big picture by taking that limited view long term. It is fine to look at that measure near term if you really, really have to, but that is very much where the puck is right now. Where the puck is going to be is 2, 3, 5, 10 years down the line, where we have this economy around Bitcoin, where we have this economy that's built up around Strategy, and now they're able to generate yield on their Bitcoin, right? They're very much able to look into ways to become, as the big talking point is, a Bitcoin bank, and so on and so forth. It is just so early in this thing, and it's gonna scale so wide that I think people are really underestimating that. And that is my very, very long-winded soliloquy on everything.
With Strategy, formerly MicroStrategy, we'll get into that in a sec. How concerned are you? Because I see this all the time of like, if Bitcoin goes down enough, people are worried that Strategy will essentially become liquidated. How concerned are you by that idea of the concentration risk of Strategy?
Not very concerned. And I say that, let's look at it from two angles. Let's look at it from a risk to Bitcoin and a risk to Strategy as an organization, as a corporate entity, right? So first thing about the margin call option. This is something that comes up over and over and over again. And we don't need to get into the nitty-gritty as why, but the debt is unencumbered. What that means is it can't be margin called. And if people would read the SEC filings and really research it, they would see that the debt is unencumbered. So this is not as if Bitcoin is going to go down to a certain value, like MicroStrategy is trading Bitcoin, and then they're going to get margin called, or they're going to go in the red, and all of a sudden have to sell Bitcoin to make the ends meet. That's not how this is set up. So that's the first piece of the puzzle. The second piece is, think of it in terms of, and I really want to make sure that I give a good example here. Strategy is issuing shares to purchase Bitcoin. So if we look at the ATM offering, once that ATM is issued and once they purchase those shares, where's the margin call coming from? They bought it in cash, but it's
True.
on their balance sheet, right?
Yep.
With the convertible notes, they are agreeing at a future date to pay for the debt in shares at a certain strike price. Again, where's the margin call coming from? Can you say that at a future date, what if the share price is not where it's supposed to be? Sure. But again, the same kind of structure exists. The debt is unencumbered because they are buying the Bitcoin using debt. They're buying the Bitcoin using equity. Therefore, there's no risk of a margin call. And that is me simplifying it to a very, very great deal to anyone watching this. But that's just the Cliff Notes version here, right? So that's first to Strategy as a corporate entity. Now let's just look at the risk of Bitcoin. No, there's no centralization risk because Strategy as an organization, as a company, as a corporation, let's say they get to the point where they own 1 million Bitcoin. That's a lot. That's a lot of Bitcoin, right? But let's say that what do people say? I think I've heard this number for like 10 years now. Some people say it's 7 million lost. Some people say it's 10 million lost. Let's say that 7 million Bitcoin are lost, right? So that leaves us with 14 million Bitcoin. Strategy's got 1 million of them. We're still issuing Bitcoin until 2140. Is that a risk? Is that bad? Well, it depends on what you mean by bad and what your own perspective is. And this is something that people need to come to terms with themselves. Bitcoin is a peer-to-peer electronic cash system. There's nothing that says those peers can only be individuals. Those peers can be corporations. Those peers can be other companies. Those peers can be nation states. Those peers can be states. Those peers can be cities. There's nothing that says larger players cannot exist in the network just as much as smaller players can exist in the network, right? So all Strategy is doing is they're accumulating Bitcoin as a free player in the network, and they're paying the market price for Bitcoin when they buy it. If people think that is somehow against the ethos of Bitcoin, that is the counterpoint I bring to them. They're a peer of different scale existing in the network. And if they are a peer that is existing at scale, and they then take and again, Saylor has been very, very forthright in this. He hasn't really wavered from it. He wants to use Bitcoin essentially as a Trojan horse into traditional finance, and he wants to siphon away as much capital as possible from traditional finance to put it into Bitcoin. That's a net positive. That accelerates adoption, right? That accelerates the transition from Bitcoin being $1 or $2 trillion market cap to 10, 20, 30 trillion. So I don't think it's a risk of centralization, and I don't think it's necessarily a risk that Strategy would own so many Bitcoin, because they're just a different peer in the network. And that's just one of the ways that I look at it.
Something happened. I'm pretty sure this was last month. I'm so sorry. I've been kind of checked out of markets for the last little while, which has actually been a good thing. It's been a nice time to. It's been a good time to actually touch grass and get out of looking at charts all the time. But GameStop kind of came into things. Ryan Cohen, I think he issued 1.5 billion in convertible notes to raise funds for like acquiring Bitcoin. I think that a lot of that got overshadowed by just current market structure and Donald Trump kind of, implementing tariffs on everything that exists. So what's the market impact of GameStop actually being like, hey, we're going to buy, a non-insubstantial amount of Bitcoin?
Well, so the GME piece is something I think is going to be far more interesting in coming months, right? But as it stands right now, when the first buzz started, when Ryan Cohen had that picture with Saylor, right? Everyone was just like, is GME going to do it? And
Yep.
people have been talking about GME, doing the Bitcoin play for months now, right? Saying that'll be the perfect play. As a matter of fact, I think the first time I heard about this was probably almost a year ago now.
Yeah,
People
it's
were
been a
saying,
while.
yeah, people are saying that GME should do it. They're the perfect corporate entity for it, so on and so on and so forth. So here's why it's different. They are fundamentally in a different place as a corporation than Strategy was when they adopted the Bitcoin playbook, right? GME right now is flush for cash. They have $4 billion on the balance sheet. They issued 1.5, as you noted, and I believe that the 8K said for corporate purposes, for corporate expenses, and buying Bitcoin in keeping in faith with the company's vision, blah blah blah, something like that, right?
Yep.
So they are essentially running the Saylor playbook right now by using convertible debts to buy Bitcoin, because a common question was, well, they got $4 billion. Why not just smash buy Bitcoin? Well, first, why would you empty your coffers at that level right away, first thing, without understanding how your corporation is going to adapt to this new strategy, right? That would be unwise. Second, the impact of them acquiring Bitcoin is something they want to feel over time. I don't think they want to have just a sudden flush rise in price that's just going to slam back down, right? So that's another consideration. And also, again, coming back to the Saylor playbook, using convertible debt is one of the best ways to accrete Bitcoin and increase the volatility, right? Because they're issuing debt, they're putting the Bitcoin on the balance sheet, which is going to drive up the volatility of the stock, which is also going to drive up open interest in the options market, which is also going to drive up overall interest and overall players in the market looking to short, looking to long, looking to hedge, looking to do all sorts of different plays, right? So GME entering in is, in my opinion, and this is where I would differ from some, I am more bullish on GME entering in the fray and adopting a Bitcoin playbook more so than the news over the SBR, the Strategic Bitcoin Reserve, for instance, right? Because right now, this is a very much more concrete action that's signaling Bitcoin adoption. It is a multi-billion-dollar corporation adopting a Bitcoin playbook. They're bigger than Semler Scientific, right? I believe they're bigger than almost any other corporation that's adopted the Bitcoin playbook, except for Tesla. But Tesla isn't running a Bitcoin playbook. Tesla just has Bitcoin on the balance sheet, right? That's a different classification altogether. So, with that said, the potential for GME, and anyone watching this is not financial advice. The potential for GME is that we've got the GameStop degens, and they're a hardcore bunch. We saw that with the whole Wall Street bets thing, right? If we have a scenario where the GameStop apes and the Bitcoin apes are merging together and saying to each other, "We're going to run this thing up, and we're not selling," that's a very advantageous position, especially if you consider the amount of volatility that we've seen in strategy. Right, it's gone up 1,500% or something like that since they've adopted the Bitcoin playbook. I'm not saying that happens with GME, but what if it does a 10x? What if it does a 100x? We don't know how this can really play out, and I think that the way it plays out is going to be very telling once they make that first Bitcoin purchase. And through making that first Bitcoin purchase, if they do $1 billion, and I don't want to do the math in my head right now, but that's going to be well over 1,000 Bitcoin, right? So they, by definition, will automatically almost be entered into the ONB ETF right away and get all kinds of passive flows automatically. So there are just so many ways that this thing can play out. I will be watching the options market on GME very, very carefully. I have already seen the volatility start to go up on the options. I'll be very interested to see when they announce their first Bitcoin purchase and how that plays out. And I'll be very interested to see what kind of passive flows that they would be entitled, well, not entitled to, but what passive flows they would likely be exposed to through inclusion in something like OMB and through maybe other levered plays that come on top of GME, so on and so forth. I think it's going to be very interesting.
You said before that your opinion differs from some, and this is something that I haven't been super caught up on. But what were the bearish takes, if there were any, on GameStop coming in? Were there people kind of being like, listen, this is actually a net negative, increasing unnecessary speculation? What was the take on the other side of this?
I haven't looked into that deeply, but I have looked into some, and essentially the same takes are similar to MicroStrategy. I've seen people saying, "Oh, someone else is doing the Ponzi play," or "Why are they issuing the convertible debt? They're just diluting. Are they going to issue the ATM? Are they going to dilute the shareholders? It's just dilution. Are they even a valuable company anymore? Yes, they're flush with cash, but their businesses have been, the brick and mortar businesses have been closing down, and those kinds of talking points are the ones that I've seen. But again, I haven't dug into it too deeply, just because. And this is not me trying to completely disavow any bearish take. This is me just saying I kind of heard this all before, right? And I need to hear something new, right? So if I hear something new, I'll give it consideration. But the same kind of considerations are going on when it comes to GME that have gone on with MicroStrategy. And those are the similar ones that I've seen.
Okay. This is something, I fumbled this earlier in the pod, but there was the rebrand a few months ago from MicroStrategy to Strategy. I think that caused a little bit of confusion as to what the reasoning was for changing a very, very well-known, household name in crypto, maybe not everywhere else, but taking that MicroStrategy brand and being like, hey, we're just strategy, to lose the micro. What's your thoughts on that?
My thoughts. So I think there are a few things here. So Saylor directly said that, to your point, strategy is a brand, right? It's very, very much global because of the interest it's been getting. But he said that he goes overseas and he heard people fumbling the name a lot, saying MicroStrategies. He saw that there was perhaps impetus to do a rebrand, right? Really restructure the way that is brought to market, the way that is presented to the market. And I also think that, and this is my personal opinion, I think they're trying to completely divorce themselves from that .com association, right? Some of the FUD, the most common FUD that comes up about MicroStrategy is that Saylor lost $6 billion in a day in the dot-com bust, right? Many people lost many billions in the dot-com bust. It wasn't just him. So to somehow say that he was the poster child for it, I think is a bit disingenuous. And I think that what he's trying to do is he's trying to completely divorce the company from without denying its roots. He's trying to divorce them from that association. And also, the name MicroStrategy is very, very 2000s. It's very, very late 90s dot-com boom name. There were a lot of micro this, systems that, microsystems this. Like it was a very, very 2000s era name, right? And I think what he's trying to do is he's trying to bring it forward. And I think if you think about it in terms, well, and again, this is just my opinion. If you think about it in terms of what are they looking to do in the future, well, their moves have been very strategic, not micro-strategic. They've been very strategic. They do have a strategy. They have a Bitcoin strategy. They have a business intelligence strategy. They are creating an economy of scale around Bitcoin. They're creating a whole new ecosystem around strategy in Bitcoin. They're turning the stock itself and the volatility of that stock into a product that they're then taking to the market. That has a very, very different connotation to a purely business intelligence company. And I think that the rebrand, calling themselves strategy, one, it's more simple. Two, it rolls off the tongue easier. Three, if you think about other future branding opportunities, what sounds better, MicroStrategy Bank or Strategy Bank?
Strategy Bank kind of hits harder. Yeah.
Right, right. What sounds better, going to the market saying that we have a MicroStrategy Bitcoin playbook, or we have a strategy Bitcoin playbook? We have a Bitcoin strategy. We are being strategic with everything. It just fits, right? And much like with the name change with from Facebook to Meta, I think people inherently have opinions about the way things roll off the tongue, and they don't like it, or they don't like rebrand brands because they say, well, wait a minute, why are you Meta now? Why are you moving from Facebook to Meta? This doesn't make any sense. Metaverse doesn't make any sense. Blah 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 blah. But fast forward a few years, does anyone really complain about the name change anymore? I don't think so. I haven't heard that in a while, and I think the much is going to be the same for strategy, right? Give it another year, another 18 months. It'll stabilize in the ecosystem. It'll stabilize in the ethos, and it'll be fine.
Yeah, well, I mean, you can really capitalize on like the kind of like goldfish memory that people have on the internet as well. Of like, it'll just become the
Especially
new
these
norm,
days.
especially these days. It's like people will kick up a big fuss about it for about a month. There'll still be some stragglers, kicking on quite a while. Of like, no, I preferred MicroStrategy or I preferred Facebook, but it is one of those things that, that rebrand strat now. It's probably never been a better time. If you want to change the name, just come out, do it quickly, get it over and done with, and then in 9 months, no one will give a shit. Just be like, okay,
Essentially, yeah.
that's ancient history. Before we spoke a little bit, we touched on it with the GameStop stuff, and how GameStop might be a little bit more of like an impactful play than the strategic Bitcoin reserve, which everyone was really, really kind of banking on being a bit more of an announcement. What's your take on the strategic Bitcoin reserve as it stands right now? And we'll get into the NDAS in a sec, but yeah, I'd love to hear your thinking around what the SBR looks like today compared to like that market hype from 3-ish months ago, where everyone was like, holy shit, Trump's getting in, he's going to start buying Bitcoin.
Mhm. Well, first, to give more context as to why I said that I am more personally bullish on GME announcing a Bitcoin strategy versus on it than at the SBR, is because I think, and this will make some Bitcoiners get very, very nauseous or very, very upset. I think the pathway to adoption, whether we want to accept it or not, part of that pathway goes through traditional finance more so than nation state adoption. And here's why I say that. Coming to the SBR, the announcement of no longer selling Bitcoin, that's great, right? The US government really shouldn't have been selling Bitcoin in the first place. Because if they had held on to it, there would be several billion, well, multiple billions in profit right now, right? Like the amount of Bitcoin they sold and the price they sold it at, looking at the price where it is now and where it was at the peak, is just absolutely ridiculous. we're going to look back on it as one of the all-time bag fumbles by a nation state. Honestly, that's how we're going to look back on it, right? Now, the reason why I am still somewhat tepid on the SBR is because we are dealing with politicians. Politicians will say whatever they have to say to get elected. They would say whatever they have to say to generate buzz. But follow through is what we need to see. Now, granted, the SBR perhaps still needs a lot of additional steps, right? If the U.S. government wants to start buying Bitcoin, they're going to need congressional approval. If the U.S. government wants to start buying Bitcoin per the SBR and per all of the um, knowledge we have as far as the program is going to exist, it has to be done in a way that's budget neutral. It has to be done in a way that does not increase the burden on taxpayers. Okay, fine. People are saying that, well, the savings through Doge, the Department of Government Efficiency, will be able to facilitate that. And sure, perhaps. I'm still kind of waffling on the whole Doge thing. I want to see concrete, empirically reviewed, truly factual dollars and cents as to how much money Doge is saving. And then, okay, now that we have those savings, are you now going to apply them to Bitcoin?
Yeah.
People are
Well,
also saying,
I
sorry,
think
go
the
ahead.
Doge, I think the Doge, just looking at recent numbers that I saw a few days ago, I think it's like they've reduced debt by 0.2%.
I saw
So,
that number too.
and I'm
I
not,
saw
and
that number
again,
too.
this is now entering
Yeah.
the realm of just shit that I've seen on the internet. I should probably
Yeah, very, very much
verify it.
trust me, bro. Yeah,
Very,
trust me,
very,
bro. Yeah.
yeah. But it's like, it's a very small amount compared to what the marketing pitch was of Elon coming in being like, I'm going to slash government spending. And it's like, okay, you've cut some of like the sillier programs and you've nuked some things here and there. But in terms of actually reducing national debt and actually bringing down that number, not
Yeah.
not what people
Right.
expected. Yeah.
Right. And granted, it's still very early, right? We
Yes.
can have a different purview on this in 18 months.
Yep.
I'm just saying all of this to say, okay, so what are all the ways that the SBR can be used to buy
Mm.
Bitcoin? It has to be budget neutral. It cannot increase the tax burden on the US citizen. Therefore, I'm thinking Doge.
Mm-hmm.
I'm thinking, is that going to be the way that they find money? Are they going to generate additional revenue from tariffs in size and use some of that money to buy Bitcoin?
Yep.
I'm just trying to think of the different ways that
That
this
you could
could play
do it
out.
without just taking like money straight out of the taxpayer pocket and
Right,
being like, we're buying Bitcoin. Because I don't think that's a
right.
very popular thing at scale. Of most Americans would
No,
not look at the government being like, hey, you're taking tax revenue and buying Bitcoin with it. Yeah.
right. And also, another way for it to be a tax burden in an auxiliary way is that they can't print money to buy Bitcoin either, right? So the handcuffs are on pretty tight, in my view, for what can be done for the U.S. government to facilitate purchases of Bitcoin, net new purchases, right? Then there's also the fact that, from what I understand, there still hasn't been a full audit, truly, of how much Bitcoin the U.S. government has. So people throw around the 200,000 number, right? But it's really not 200,000. So we are still trying to figure out, and again, this is just me, I haven't seen the absolute set figure that says 100% this is the unilateral number that we all agree upon that the US government holds. So there's a lot of murkiness with SBR right now, right? And when you throw into the fact into the hat with all the stuff going on with the tariffs and all the stuff going on with the debt situation, with all of and with the tariffs comes the potential for a trade war. There are a lot of headwinds that have come in that have kind of slammed down in front of the SBR, which has me more, you know, tepid about the potential of what can be done near term. Now, I'm not saying that by the time Trump leaves office, nothing's going to be done. That's not what I'm saying. But what I am saying is, if there's something to be bullish on, I think we should be more reserved on our expectations for the SBR and more encouraged by the events with GameStop and potentially with other corporations adopting Bitcoin in the coming weeks and months.
Yeah, okay. Well, I know that Hester Pierce is working on creating like a scheme to buy more Bitcoin directly through government. I think she's working on some legislation that's like, no, we should be acquiring it as a nation state. And then there's also the side of things where I think that my biggest concern, and this is something that I'd have to look into a little bit more, but it's around the kind of like partisan nature of crypto in US politics as well. Because it's like, okay, Trump comes in, he's got another 3.5 more years in power. If he leaves power and that hasn't been legislated in a way where the government can never sell it, what's to stop a Democrat president from coming in and being like, goodbye,
Exactly.
and then just deleting the strategic Bitcoin reserve if it's still something that's held purely as like a structure where it hasn't been legislated tightly of like, this is now a like non-divestment asset. No one can sell it.
And that's the piece of the puzzle that a lot of people aren't talking about. What secures this into the future? I know that Cynthia Lummis wants to issue a bill that says we can't sell it for, I think it's 20 years, 30 years, something like that.
Sorry, not
Right?
Hester Pierce, Cynthia Lummis. That was my bad. I'll
I thought that's what
include
you
a
meant.
little little
Yeah,
asterisk somewhere of like, I'm
yeah.
an idiot, wrong one. Yep.
Yeah, I thought that's what you meant, but I didn't want to correct you, so
No. Perfect. Yep.
yes. So with that said, you know, again, and this is what makes me less popular on this talking point. Show me the
Not
money.
just providing pure hopium. Yeah.
Yeah. Show me the money, man. Like, where, when are you going to buy? How much are you going to buy? Just show me, honestly. It's similar to GameStop, right? But at least GameStop has their 8K. They have said that they're issuing the 1.5 billion, and they intend to buy Bitcoin. Now it's just a matter of them announcing the purchase, right? This is what I mean by, I think the path to adoption goes through corporate and individual adoption versus nation state adoption. And here's another piece of the puzzle, and I don't know if we want to go down this rabbit hole. No sovereign nation, especially the United States, is going to empower an alternative currency in a way that can challenge the US dollar. So there are very powerful macroeconomic and geopolitical headwinds that come to bear with this Bitcoin strategic reserve and America buying Bitcoin at scale. I've heard people saying, oh, sell gold to buy Bitcoin. Okay, sure. But what does that say to the gold market if the largest economy in the world is now selling gold to buy Bitcoin? What kind of turmoil does that create? What kind of second and third order effects come from that decision? And this is why I'm saying it is not just a matter of them buying the Bitcoin. It is what that signals to the world when it happens. And you and I probably believe that Bitcoin is a pristine asset. I'm sure we agree on many of those points. However, we also probably will agree that the European Union, the United States, Russia, China, Australia, so on and so forth, they're probably not going to be too keen on another currency coming and upending all of theirs, which is why I think that the future for Bitcoin is as a reserve asset and as a secondary, more modern version of the gold standard. But sorry, go ahead.
Yeah. No. I think that's kind of exactly it. Like, no developed country with like a strong domestic dollar is going to say, hey, we'll actually invest in something that could create instability in our own domestic currency. And like, I mean, the only nations that would do that would be with an like unstable domestic currency that are like, we've got hyperinflation, we're going to build up a Bitcoin reserve to help stabilize that. And, you know, there's not too much risk to our own domestic currency because it's already in the fucking toilet. So there's not that like, yeah. And the countries that can do that don't have enough buying power to really move the needle in a way that I think the more like nation state acquirer enjoyers would be like, oh yeah, this is how we do it.
For Bitcoin to upend anything, we are still very, very, very early. And what I mean by that is, as a $2 trillion asset, Bitcoin is not really a threat to anything. As a $20 trillion asset, Could you say it's becoming systemically important? Perhaps. I don't think anything even remotely close to a Bitcoin standard comes until we are somewhere between 50 to 100 trillion, is what I think. And the reason why I say that is because at that scale, if we think about layer two, right, we think about using Bitcoin day to day, which I don't think it should be used for, quite frankly. I really
Yeah,
do think it's
I was
digital gold.
about to ask. I was about to
Yeah,
ask your take on the Bitcoin as a currency. Yeah,
yeah. I really don't. I think that it can be a currency, but I think that as digital gold backing a currency is a far more.
yeah,
Um, hang on, let me rephrase that because I'm going to piss people off if I say what I'm going to say.
yeah,
I think digital gold represents a better future for Bitcoin versus people thinking about things in the sense of I am exchanging X amount of sats for this bag of Doritos or something like that, right? And on a gold standard, yes, every single dollar bill we had was a direct representative of X amount of ounces of gold. I understand that. I fully do. And I know the same would be on a Bitcoin standard. However, with a fiat currency sitting on top of it, I think that we don't run the risk of people saying in 2030 they bought this iPad or this iPhone for X amount of sats that are now worth as much as a BMW in
yeah.
2070, right? So,
Well, it's the most ridiculous part of the Bitcoin as a currency argument. It's like you need that, like, because there's all those, like, we've all seen it, the qualities of a good currency. And like the one thing that Bitcoin can't nail at the moment, maybe in the future, but even still, is that idea of like relative stability to buy, a weighted basket of goods or services at, a relatively stable price over a long period of time. Because if you have people being like, well, my Bitcoin could be worth double this in a year, you're not going to spend it. And all Bitcoiners already do this is that they hodl because they know, well, they believe that the price of Bitcoin will be higher in the future. So it's that thing of like you're incentivized not to spend it at a very base level if you believe in Bitcoin, actually going up over time. And you don't do that with fiat currency because you know that a dollar is worth a dollar now and it will be, accounting for inflation, it will be worth a very similar amount in, the next year or two.
and also if we think about it, on a gold standard, spending habits were very, very different. People weren't buying new cars every 3 years, right? People weren't taking out home equity lines of credit to buy a boat. People weren't living the way that they do right now, right? It was very, very common for someone to buy, and this at least is the way my father tells it. It was very, very common for someone to buy a car in their early 20s and drive that thing until the wheels came off. And you could because the production value of that car was very, very high. There are all kinds of second and third order effects of being on a ultrasound money, right? You if someone knows that you have ultrasound money that is going to hold its value, that they know that they worked for, that they can save, and is going to retain its purchasing power, they know that this $20 today is still going to get me the same amount or more in the future. Spending habits are different, production habits are different, manufacturing habits are different, so on and so on and so forth. Which is why, very, very plainly, I think you have houses that were built 100 years ago that are still standing, while you have McMansions built 10 years ago that already have drywall that's falling apart, they have foundation cracks, and they have so on and so forth. When you have a fiat currency driving everything, and everything is produce, spend, print, it's a very, very short-term way of thinking. Before we can go back to ultrasound money, it would require a fundamental reworking of the current modern relationship with money. And I don't think people are ready for that. It's not just a matter of economy of scale. It's not just a matter of politics and geopolitics. It is a matter of the way people have gotten accustomed to living. We have a fiat state of mind with everything. New phone every 18 months, new TV coming out every 2 years, new this coming out, new that coming out. Everything is very go, 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 quick, 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 quick. I don't think that kind of mentality persists when you have ultrasound money and when everything isn't about the next thing. Everything isn't about the next profit margin. Everything isn't about the next way to make money.
Funnily enough, one of my like hottest takes is that I'm not a I kind of draw a line in the sand. This is a bit of a rabbit hole, so I'm opening up a can of worms here.
Let's do it.
The what happened in 1971, kind of like line of thinking around. Oh, it was the removal of the gold standard. I think that's a huge part of it, but I do think that there was a lot of other stuff happening in the background around that time as well that also drove the kind of just wash of, I'm going to use the term debt here, but I just mean like general liquidity being thrown around. You also had, I think one of the biggest things that kind of goes unnoticed is Reagan and the introduction of the Sunshine Laws, which was essentially allowed corporate lobbying in the United States at scale.
Oh my God.
Opening up the floor of Congress to say like, hey, okay, big corporations are going to come in. It's Marx's nightmare of like, this is like post-capitalism. This is it. Like you actually have corporations involved in the government that can then use the government as a proxy for their own interests rather than the government existing to serve people. And I think that's probably one of the main drivers of that level of like, okay, now we have cheap debt that can be issued, willy-nilly. You actually have the government kind of as a bankroll for corporate interests rather than that removal of like, okay, I think GFC is the most perfect example that everyone uses of bailouts. I just genuinely think that my take is that just governments shouldn't be propping up business really at all. Like if you're going to be a free market fundamentalist, you just have to be like, well, no. If you're going down, exactly. Yeah. I'm like, no. The government can't come in and save you when things go poorly. We saw it in COVID again. I'm like, oh shit. I mean, that's a very different scenario of like there's a pandemic, but even then, the level to which
rationale holds though.
The level to which corporate interests were overrepresented, just even in Australia, we had our government print 360 billion out of thin air, and then just essentially throw it at major corporations with no clawback mechanism or no need to pay it back. They just threw insane sums of money at things like Qantas, which is like our major airline, which didn't need money. They had runway, but they were like, shit, help. We're not gonna be able to deliver shareholder value this quarter. And at a certain point, you'd have to say like, how much should governments be coming in and helping these things out? And I think that is something that creates that really entrenched inflation over time as well, because you just have all this money going from the taxpayer to giant entities that don't fundamentally, at like a natural level, need it. That kind of interim period of change would be very painful for a lot of people, but it would be the kind of cleansing mechanism that you need to get shit back to a base level of like, okay, we've had a wipeout. How do we adjust to this without taxpayers being the ones that have to foot the bill for things to stay the same? And that's my kind of little take on it. It's also early in the morning on a Sunday, so I'm a bit rusty.
Well, so the thing about it is what you're illustrating is the global reality. What you just illustrated is the fact that at a very, very basic fundamental level, there's no separation between corporation and state, right? So the reason why these bailouts had happened wasn't just because, it was systemically important and so on and so on and so forth. It is because politicians at a very, very base level were in bed with a lot of these corporations. And they voted self-interest and they pushed self-interest ahead of the interests of the American people. Now, also, the reason why things went the way they did is the systemic argument is valid because by all measures, the GFC would have been much, much worse without corporate intervention, right? Things would have spiraled very, very fast, very, very, in a very, very absolute way, to the point where, things like FDIC insurance. So I don't know what the equivalent would be in Australia, but here, FDIC insurance, insures your bank deposits up to $250,000. That's the vast majority of American people, right? And there are many people saying that FDIC is essentially insolvent because they don't have the money to cover all of the deposits, right? And now you don't have fractional reserve banking, you have zero reserve banking. So what's going on in the US at least is banks are just issuing loans against money that just comes in. When a bank issues a loan, for example, if let's say you take out a mortgage, they don't have $360,000 that they're giving you. They're creating 360,000, 400,000, 500,000, however many thousands of dollars it is on their balance sheet, and then issuing a loan to you that you're then paying out debt. They then say, we now have X amount of hundreds of thousands of dollars on our balance sheet. We're now going to use that to prop up our coffers on the balance sheet and lend out more money as well. And it's just kind of this perpetual cycle. It was a house of cards that was going to topple over if the government didn't intervene. But the only reason why it got to that point in the first place is because politicians allowed it. There was no regulation. There were no stopgaps that prevented these banks and these corporate entities from running roughshod. So of course, when they became insolvent, they were going to get bailed out because they were woven into everything. So there was really, I don't know if there was a choice besides all hell breaking loose. And would we have wanted that? Would that have made things better?
This is the thing, is like the more practical side of me kicks in and thinks like, okay, if you actually don't intervene and you don't bail out, even at like some level, there has to be, I'll admit that there has to be some level of bailout, particularly when it comes to things like at the very least, yeah, the banks and that kind of like base layer insurance of regular people's assets. Because if you don't, that's where you end up with people running around on the street kind of chasing each other with pointy sticks. But I mean,
for sure.
In America, you guys have guns, so shit would be way worse than here in Australia. It'd be, yeah, exactly. So I'm like, things would not be, things would be far worse over there. Yeah. All right. We'll move off that. We'll close up that chapter.
Away from chaos, away from destruction.
Away from chaos and into our own. No, we'll stay on the chaos side of things. I'm interested to hear your take on where Bitcoin moves for the rest of this year and what we're looking at. Because at the moment we've had a very, very interesting start to Trump's presidency. We've just had the kind of like intentional destruction of markets at this point, which, you know, I've seen lots and lots of different takes on. There's, you know, the art of the deal. It's all a negotiation structure.
Yeah, I'm a little skeptical on that one.
I do think that that's giving a bit more credit where credit is due. I like to ironically say like art of the deal, but, you know, whatever the fuck that means. Where do you think we're headed at this point in time with, you know, the backdrop of Trump just introducing tariffs, like a 70% tariff on Vietnam?
Yeah. And the tariff discussion, we can have a whole hour and a half talk on that one, right? So let's keep it surface level. The tariffs have definitely caused a lot of market turmoil, right? And with that, there's been a lot of talk of Bitcoin decoupling. You know, decoupling from S&P, decoupling from the markets, and going its own route as a risk-off assets, right? So first, I would say to be cautious with those takes. There's a lot more that goes into the notion of decoupling than just a few days of resilience amidst market turmoil.
Relative strength.
Yeah, relative strength. Yeah. Yep. And on the flip side, just because if Bitcoin now all of a sudden rips up to 90,000, that doesn't mean that the market's going to crash 90% or some crazy nonsense like that, right? I think people are just trying to make sense of what's going on. Okay, so that's the first little soliloquy there. Now, with regards to where Bitcoin can go, I still think that we have a very good shot at, you know, going over 100K again before the year's out. But, you know, with that said, that is at the mercy still, in my opinion, of the markets. If this tariff war, this trade war goes on in perpetuity for the next weeks, months, however long, there's going to be a lot of damage that's done. And again, I keep talking about second and third order effects. I think that those are very, very hard to predict. This is not an economy of, you know, 1940, 1950, or what have you, right? This is a very, very different economy that we have right now.
It's a hyper-globalized economy. Like, we don't have domestic production lines to fall back on. I'm saying we, like I'm an American, but go on.
But no, but it's the truth though. Like, whether it's Australia, whether it's the U.S., manufacturing and production has become globalized, right? a lot of countries are net importers of a lot of different things. So, and also when I say second and third order effects, it's not just a matter of, global trade and import costs and things of that nature. We have trading that now goes on at the speed of light, right? People aren't sitting at a desk, doing their trades right now. It's all algorithms, and there can be a chain event that kicks off with algorithms running riff shot on the market, just issuing sales at inopportune times that can cause cascading effects. And granted, now they have circuit breakers that prevent that, right? So everyone calling, for instance, for another Black Monday, that's not going to happen because there are actual circuit breakers in the market that if things drop down below a certain point, they stop. And I forget the certain percentages, but I think that it's somewhere between 7 and 15%. If there's a sudden collapse, trading stops. That's the circuit breaker. And then there's another circuit breaker if it goes even lower. So I don't think we're going to have a Black Monday, right? I think that could we see another 5 to 15% down? Sure.
Slow grind.
My
Yeah.
Yeah, my gut feeling is that someone's going to blink. And I retweeted a tweet this morning um, that essentially went into that, saying that we're playing a game of chicken right now, and we're waiting to see who's going to blink. Is it going to be the American Fed that's going to blink and lower interest rates? Is it going to be Donald Trump that blinks and backs off his tariff plan? Is it going to be one of the geopolitical players that say, okay, fine, Mr. President, you win. We're going to give you what you want in terms of global trade and so on and so forth? I think that's what's likely going to happen. Someone's going to blink. But the challenge of all of this is, and the reason why I keep talking about the markets more than Bitcoin right now, is because we have a scenario where the United States is the largest economy in the world, and they have a debt bill that has an interest rate on it that they can't service. All of this is theater in many ways. The debt needs to be serviced one way or another. And I think what's going on right now is that we have an administration that's saying, okay, fine, you won't lower the rates, we're going to tank the market. And we're going to create the scenario to allow that to happen. And everyone is saying, oh, this is about global trade. This is about playing 4D chess, about trade deficits. This is about da 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 da. I disagree. I think it's about the debt. I think all of this is political theater. I think that what's going on is we know the bill's coming due. Interest rates have to come down, and one way or another, they're trying to manufacture the circumstances for those interest rates to come down. The problem is that the Fed is often late. They're often a quarter to 2 quarters late because they're looking back at data instead of projecting forward, right? And that's where things can get prickly. Long story short, I think Bitcoin can be resilient, and I do think Bitcoin can reach over 100,000 this year. I've had fun with the tweets about predictions of 400,000 plus, 250,000 plus. If we were to hypothetically match what we had in 2020, 2021, we can see 350 to 400 if we were to match that kind of return. All of those things are fine, but I am more cautious now because we thought we were getting an administration that was going to be hyper bullish for stocks, hyper bullish for Bitcoin and risk assets and whatnot. It turns out that, and I don't care if this pisses people off, he pumped Trump coin, he pumped Melania, he got his Trump pump, and ever since then it's been Trump dump.
Yeah, that was a savage time. I remember I was on holidays in January when Trump launched the Trump coin. I saw the notification on my phone that it was like real from like a group chat, and I was just at the beach and I thought, you know what, I'm not doing this. But at that time I was still like quite bullish, funnily enough, because I thought, hey, the president's like the pure self-interested part of me was like, the president just launched a meme coin. Sweet.
That's
like,
great, right? On the surface,
we're on.
It's great.
What and this is purely like the meme coin degenerate side of me was like, when they launched Melania, I was like, oh, okay, it's over. Pack it up. They're just going to keep doing the grift of like, this is an extraction game for them. And I was like, oh, I thought it was a novelty. I can't say my better self liked the idea of the president launching a meme coin. I just think that that's something that probably shouldn't happen for the leader of the world's largest democracy to be doing as a general thing. But my degenerate side was like, fuck it, who cares? This is great for the Solana blockchain, which I owned a lot of at the time. So I was like, great, cool. And then the Melania coin was just that, like, oh, this is a grift. This is a grift. Fuck. And I've been roped into it. Great, fantastic. Go me. Yeah.
The thing with it is, and this is where I have struggled. So, and again, this isn't me getting political, Democrat, Republican, anything like that. From an optics standpoint, right? What made me very nervous with all that is, to your point, we have a sitting president that's associated with a meme coin. Because he can say whatever he wants. He has said it's a great coin himself. He's done all this stuff.
Yep.
And again, I don't want to seem like I'm shitting on alts, that I'm shitting on memes, or that I'm shitting on Trump. I'm just trying to give things from as an objective space as possible. We should not have a scenario where a sitting president has his foundation, fund, family, whomever, launching meme coins on while he's in office and profiting from it. That's the first thing. Second thing, the Bitcoiner in me was like, you are grifting. This is a grift, just like you said. There was so much effort put into Trump. There was so much effort put into defending it by a lot of people, right? Saying that he can launch it if he wants. He's a free citizen, Okay, fine. Presidents have profited. Every single president has profited in stocks, I'm sure. Every single president has profited. I'm sure, okay? I'm not saying that he is worse than others by any means. But if we are thinking about things in terms of the SBR, if we're thinking about things in terms of really fundamentally changing the dynamics that exist in our traditional financial system, in our economic system, this doesn't foster that. Having yet another meme coin on Solana doesn't push that agenda forward. And a lot of people are saying this is good for adoption, but I was like, I mean, I know you've been in memes. I haven't been, but I think a lot of these memes are pump and dumps, right? And what you're trying to do is you're trying to catch the pump.
Shit,
and you're trying to get out, right? But strictly speaking, that isn't good for adoption, right? What's good for adoption is the United States government purchasing Bitcoin and not just saying to the world, Bitcoin is a pristine asset. Bitcoin is digital gold. The United States government should own Bitcoin, but actually showing the world we're purchasing the Bitcoin. We are not engaging in any of the other shenanigans. None of us are. We're not here for that purpose. We are here to fundamentally change things.
Yep.
We are here to strengthen the dollar with Bitcoin. We are here to strengthen the position of the United States in the world economically, right? I just don't know if that was served by all of the meme coin shittery.
No.
And this is why I became so skeptical on the notion of the SBR. I was skeptical at first. I was very, very taken aback in a good way when I actually saw the SBR, being pushed forward, and you have the United States government saying that Bitcoin is a pristine asset and all this. I was like, okay,
fantastic, great news.
Here we are, right? But when there's just so much uncertainty right now that I think that we should just be focusing on Bitcoin, irrespective of the SBR. And I think, again, coming back to my other point, corporate adoption, individual adoption, perhaps state level adoption is where I think the future is very, very bright. The SBR, I am happy, and I'm looking at the camera saying this, I will 1000% happily be wrong. I think the SBR is a grift. I don't know if anything's going to come from it. I am very, very skeptical of it. It's only been 4 months or whatever. I understand all of that. But there's too much chaos being created right now for me to say definitively there's a plan for anything, right? There's no planning. There's just doing. And that's what makes me nervous.
Yeah. Well, it's all part of the. I mean, again, like it's just straight from the Steve Bannon playbook of just like overwhelm. I'm sure there is a strategy, but I think that strategy is overwhelm market participants. And I mean this in like a global sense, like other nation states. If you're the one that holds all the cards for the most part, it's very easy to create chaos and then benefit from it.
But again, second, third order effects. What's the reaction going to be to this?
Yep.
For instance, dude, if I flew to Australia, set your house on fire, right, and then came back and then said, well, hey, look, I'm going to help you rebuild it. You would look at me like I'm a fucking maniac, right? And that's kind of what's going on with this plan right now. In my view, I understand the intellectual, policy-driven, methodological underpinnings of why something like this would be done. However, you don't do it by taking a sledgehammer and smacking someone over the head. You do it strategically. 10%, 20%. But some countries having 60, some countries having 10. There's so much uncertainty being created that second and third order effects, I think, are going to be a very, very real thing. And again, this is not me saying the market's going to crash, everything's going to fall down. That's not what I'm saying. What I am saying is, for Bitcoin in that environment, where do we find equilibrium? What's going to be the narrative that drives equilibrium, right? Is it just going to become risk off? Perhaps, but again, coming back to another point that I made early on, I don't think Bitcoin hits that true risk off point until the market cap grows. And the market cap's going to need to grow organically like it has been over the last 15 years, right? We're going to need to really push our way up before that click happens in people's minds and they see it as risk off. Because there's many people that still see it as a bubble. There's many people that don't even know about Bitcoin. Like they've heard Bitcoin, they've heard the name Bitcoin, but they don't know what the heck it is, right? And I think we still are going to go through those, and I hate to use a bubble analogy because the reason why you like using it is because it's not a very apt analogy. Bubbles don't inflate, then deflate, then reinflate bigger than they were the last time, then deflate, then reinflate bigger than they were the last time, right? That's called an economy. That's called adoption, right? Bubbles pop.
And that's it. Yeah.
Yeah, and that's it, and it's done. And Bitcoin isn't a bubble. Bitcoin's an S-curve, right? So what we're seeing right now is we're trotting along that S-curve. And well, I posted a video weeks back where a guy said, and I forget his name, a bubble is a bull market in which you don't have a position. And I think that's what's going on right now with a lot of the Bitcoin talk, right? People
sidelined is the
exactly.
Yeah.
People don't own it; they want to poo-poo it. I think we're very much in that phase still, which is why I'm reticent to say, "Oh, we're going to the moon, 400,000." I think we can go 100, 150. I think that having BlackRock and Uncle Larry involved right now, I call Larry Fink Uncle Larry. I think it's a very, very fortuitous development that happened in 2024. And I think that bodes very, very well for Bitcoin's future. And I think that, the ETF inflows are going to mature. And when I say mature, I mean they're going to stabilize, then grow, stabilize, then grow, stabilize, then grow. I think we're in that upwards trajectory of the S curve. But with the macroeconomic headwinds right now, I will be happy with 150.
Yep. Yeah. I mean, it's just the involvement of Uncle Larry is just essentially like the stamp of approval for boomers, basically. It's just like, shit, it's not a total grift. Would you look at that? I think that's the big thing of like the number one question of like, you mentioned Bitcoin to any human on the planet that isn't in crypto or doesn't own any of it. And it's like, oh, isn't that a scam? That's generally the knee jerk. Yep, 100%. Yes. I tell people I work in crypto and they're like, what? Like, that's all a scam, right? And I'm like, yeah, that's why I work in it.
I've tried mentioning, I've tried mentioning the BlackRock ETFs to people, and they're like, "What's the ETF?" So they don't even know what an ETF is.
There's also that, yeah.
Let alone what a Bitcoin ETF is, right?
Levels to the financial literacy that you're dealing with.
Precisely.
But yeah, but even with people that are financially literate, it's a thing of like, that's a very fringe topic to bring up. So yeah, the Uncle Larry involvement is just that kind of like rubber stamping. Cool. It's somewhat legitimate in the eyes of most people. But yeah.
Now, the one caveat I will give quickly is that the downturn we saw at the end of Q4 I think was strongly correlated to a drying up of liquidity, right? So
I was about to ask you where you think, like, kind of, because that is the
yeah,
big macro take of like what happens, global M2, where's liquidity coming from, QE later this year. I'll let you run with it. Sorry.
yeah. No, it's perfect. The data points to a drop off in liquidity at the end of last year, right? And we had, if we look at Bitcoin, if we look at strategy, if we look at Nvidia, if we look at a lot of the other stocks, we had a bit of a feverish run up in a lot of them, right? And some ran up at different points, but people do rotate from stock to stock at different times. So I think what we saw was a run up in prices, especially when Bitcoin was like at 108, 109, and strategy was at like 543, and then they started to taper off into the new year, right? I do think that we're going to see, and the data bears this out, that we're going to see an increase in global liquidity, right? Now, here's the thing. I haven't done enough research to know what happens in an environment where you have a trade war going on, where you have interest rates that need to come down, while simultaneously having global M2 going up. Those seem to be fighting one another, right? Because if you think about the tariffs, and here's a quick segue about the tariffs. They are inflationary, but not in the way that people think. So the inflation you're going to see is, for you as in Australia, for instance, you would have an Australian produced bottle of water being $1, and then you would have an American version being $1.25. You still very much have the choice to pay for that $1 bottle, right? Or you can pay for that 125 bottle. So the inflationary effect of tariffs often come through as a consumption tax. That's often how they are expressed to people, right? So they are inflationary, but it depends on how you define inflationary. So I say that to say, again, second and third order effects. How does increasing liquidity play out with increasing pressure from inflationary effects of tariffs, with increasing pressure of high inflation, and then increasing pressure that all brings onto the market? How does that play out? And that's still a thesis I'm trying to work through.
Assuming that this isn't over in like the next couple of weeks and everything just gets worked out and everyone's happy, which would be a nice
It could
outcome.
happen. It could
It,
happen.
it could happen. Weirder shit has happened. It could just all be a play, and then he negotiates some better, um, you know, actual deals on imports, exports, that kind of thing. Sure, but yeah, there's going to be so much competitive randomness being thrown into the system that's then also being shaken up at the same time. And that's just also not accounting for more random stuff that he could do in the future as well. And I don't mean that disparagingly. I just mean the guy is like a randomness generator. He just shows up and just says and does things on any given day. So I just think it's one of those things of like it's going to be a fun time to be in markets, put it that way. Because on any given day, you could just wake up and do or say anything, and you'll be like, fuck, okay, we're flipping short. Okay, no, we're flipping long again. Actually, I don't know. So,
It's
yeah.
true. It's true. And I also do think, and we should definitely make sure to, want to make sure to make a point about this. People confuse liquidity with stimulus, right? So lowered interest rates would mean additional liquidity in the market. Stimulus is QE. Stimulus is money print or go burr, right? And I think people are confounding the two. Um, I would be, I want to be very specific with what I'm saying here. Without some very nasty market action, I'm talking we lose another 30%. I would be very shocked if the printer goes on this year. Now, lowered interest rates, I think that the latest projection I saw is 2 or 3 cuts is what I saw.
2 to 3.
That
Yep.
yeah, is what the Fed is what they're projecting the Fed to want to cut this year. Again, I think that's possible. And the challenge with it is that I'm not trying to give the impression that I'm disparaging one presidency or the next, because another challenge was that yes, interest rates were coming down, but they were not coming down fast enough before that first bill is due, right? The bill is still too high, and they need to come down faster, which is why I think the president is showing his hand, because he's urging Jerome Powell to cut rates, right? When a president is saying that, I think he's showing his hand. And when that happens, some people are saying it happened in May. Some people are saying it happened more close in Q3. Coming back to the point we just discussed, somebody has to blink here. Because if Jerome Powell is like, you know what, go ahead and burn it to the ground, I'm not budging, and then Trump is like, okay, I'll burn it, and then our global trade partners are like, oh, so
You
you
guys
really,
never had a plan. Yeah.
yeah, you guys, you're literally just creating chaos. Okay, we're going to do a reciprocal tariff to the reciprocal tariff to the reciprocal tariff of the reciprocal tariff, and it is just not going to stop. So I just think that, someone needs to blink here.
Yeah. Okay. Adrian Morris, thanks for coming on the show, man. Have you got anything coming up, or places you want people to check out? What's on the horizon?
Well, I will be at Bitcoin Vegas, so I'm hoping to see a lot of people there. As far as what's coming up, I am doing a lot of work with the MSTR True North group. We just launched a website. I will be writing for the newsletter. A lot of us will be writing for the newsletter. We do a live stream every Wednesday night at 7 p.m. Pacific time, U.S. time. And yeah, you should check us out. And besides that, I try to post fairly insightful things whenever I can. I'm not opposed to shit posting as well. I do troll sports comments from time to time. But yeah, that's me in a nutshell on Twitter. I'm trying to grow my presence. I'm trying to put out more content. I'm trying to do more live streams like this one, or sorry, podcasts like this one. And yeah.
Yeah, awesome. And I mean, people can find Adrian at Adrian_R_Morris. Thought I'd just plug the handle there as well. Yeah.
Oh, yep. Thank you.
Mate, I'll come tune into Master North, because you've kind of you've peeled me on the MicroStrategy, sorry, the strategy. So I'll come check it out. Yeah.
You should. We've got a lot of episodes that are on the website as well, the back episodes. And yeah, we do our best to give bullish yet objective analysis on strategy. And we also talk about GME and a few other plays every so often. We also sometimes talk about macroeconomic issues. We try to be fairly well-rounded. So I think we're a pretty smart group of guys. So definitely give us a look.
I will do. Mate, thanks so much for coming on the show, man. Really appreciate it.
Thank you for having me on. Peace, everyone.